Welcome back, everybody. I hope you're having a fantastic day and looking forward to a awesome weekend. If you're a Super Bowl fan, this is the big Super Bowl weekend coming up, so we have a lot going on. One thing I want to make sure you follow me on Twitter. Markets are extremely volatile right now. There's a lot of things going on, and I want to make sure that I bring you timely updates as market conditions change and assets change, markets change, and things like that. So my Twitter is in the comments below. It's also in the description, the link to my Twitter. So make sure you follow me there so I can give you updates of these videos when they come out and anything else I'm seeing in the markets, just to kind of give you a heads up. We've been following a lot of things. There's a lot going on. And as you know, the markets are in turmoil today. So let's take a look at it. The big news, obviously, the markets are down right now. It is currently about 3 p.m. Eastern Standard Time, and markets are set to close in about an hour. And as I always say, you want to watch the strength into the close. That'll tell you a lot about how markets are setting up for the week ahead. So markets are down about 1.5 to 2.5% across the board. NASDAQ is down the most again. As the tech stocks continue to take a hit, the NASDAQ has taken a hit. So what changed? We had a little bit of a rebound going on, and what changed the narrative? There's two things. One is that it's becoming more and more imminent that Russia is going to invade Ukraine and attack. That is not going to be a good situation. My heart and prayers are with the Ukrainian people. I feel terrible about that. I hope there's a way that we can avoid that, because this is not going to be good. And if China gets involved, it's going to be even worse. There is potential for major world conflict there. So this is not a good situation. This is not a good thing. So just want to put that out there. But that is something that's on the climate. That is something that's affecting markets. As asset managers and investors want to take risk off the table when these types of things happen in speculation. The other thing is, we talked about yesterday with the inflation print, that the markets have not priced in action from the Fed yet, crypto markets or stock markets, because the Fed hasn't done anything. They're still buying bonds. They still haven't raised rates. They haven't changed anything. And when Powell spoke, he said, we're not planning on changing anything. We're going to monitor. We're going to be nimble. So the Fed is meeting on Monday, February 14th. They are having an emergency meeting, and we'll take a look at the price action. Kind of interesting how the bottom thesis that we've been following, I put that video out on January 14th that Bitcoin would bottom around February 14th. The Fed is meeting on the 14th to take action. So we could see a little bit of a sell-off depending on what they do. They're expected to take a bigger, stronger action to fight inflation. And you have to remember, these inflation prints that come out are a month behind when they actually happen. So that print that we just received was for January. February's print comes out March 10th. So the Fed knows they cannot wait to take action. Powell probably got a phone call from Biden and said, hey, if you want to keep your job, you better call a meeting Monday and you better do something about this inflation. So they are way behind the curve on inflation. They've lost credibility. Now it's kind of getting embarrassing for them that they're just completely incompetent. That's the narrative. That's not me. That's the narrative from the investment world. That's investment bankers, investment managers, governments around the world. They view the current Federal Reserve chair and board as incompetent and completely have lost complete control of the situation, and it's too late for them to be able to play catch up. So unfortunately, the markets are going to have to absorb the impact of their poor decisions, their poor planning, and their poor processes. A lot of people made a lot of money off of what they've been doing. So now it's time to take chips off the table, take profits, and unwind all of that liquidity that's been going on out there. So as you can see, Bitcoin, this is the hourly chart for Bitcoin today. Bitcoin has topped twice. We had the double top here locally at 45.5 in the range that Bitcoin was rejected, trying to breach this level over here to see if we could get to the next level of the retracement. But with all the news, with the Fed coming out on Monday, February 14th, to make their decision, they are going to raise rates. They might even say that they're going to eliminate the asset purchases, bond purchase program, or they might do nothing. So we'll have to see. The market still doesn't believe the Fed's going to do anything, or very little. They still think the Fed is just, I don't know what they think. Well, they think the Fed's incompetent, and they don't think that they're going to do anything. So the complete 0.5 point rate hike, 50 basis point rate hike, and bond purchase program elimination if that's what the Fed comes out with, we're going to see some more sustained selling, ultimately find the bottom to get into that retrace. Kind of funny how that's February 14th. I don't know if the Fed's been watching my videos or what they're doing, and knew that they had till the 14th to get their act together and bottom the market so we could continue onward and upward. And we also talked about the buy the rumor, sell the news event of the Super Bowl crypto advertising. And I talked about crypto.com. Crypto's been on a tear ever since I said that. Last week, it's jumped about, let's see what this was. This was a nice little trade here. I hope you got some of that, 64% since I started talking about that. So now we're in the sell the news event, buy the rumor, sell the news. I'm out of crypto.com. So if you took that trade based on what I was talking about, I'm not comfortable riding that into the Super Bowl. I'm fine with, I got 40% out of that move. I'm fine with that. So I am not riding anything into the Super Bowl. I think we had our Super Bowl pump here, and I think there's just too much momentum and headwinds against the markets right now, with the Fed meeting on Monday, trying to price a little bit of that in right now, as well as global conflict and what's going on there, that the markets are trying to de-risk and take chips off the table there. And Monday, depending on what the Fed says, could be another big event. So let's take a look at the daily here. We've been following this little fractal over here. And again, February 14th, we'll see where that comes out. Could put us back testing that $35,000, $36,000 range that I talked about for ultimately to get the bounce that we're looking for into the retracement, depending on what's going on with the global economic outlook and environment, with all of the issues and the things that we've been talking about. So, that's what we're looking at. And ultimately, long term, I do have confidence in the space. We've talked about all of the adoption lately that's come out with KPMG, a lot of the investment managers, with the fact that reputation risk used to be, if you were involved in the space, you were risking your reputation as an investment manager. Now you're risking your reputation and your clientele if you're not exposed and you don't offer products in the space for them. Most of the institutional investors that are vetting the space and setting up and getting ready to enter, number one, they're waiting for two things. They're waiting for good price point entry. They're not stupid. They're not going to buy in, at levels that they don't think they can get back to. And I'm not saying anybody's dumb that bought in at these levels. I'm just saying that investment managers have to manage their risk a little bit tighter than the individual does. And if you did buy at these levels, we will get back there. So don't worry about that. We will get back there. There's enough institutional adoption now. There's more on the way. End of the year, Q1 next year. Again, a lot of this depends on what happens with the Fed, what happens with conflict and things like that. We just don't know what the results of those could be and how long that will last. But we do know that this asset hit 69,000. We're going to test that again. I don't know when. I don't know how long it's going to take. That will get tested again. So if you're in these areas, we will get back there, and then you'll have to make a decision what you want to do if you bought in at those levels, what you want to do at that point. We are going to test these levels again too. So this $29,000 level will have to get retested for full confirmation of the macro or major market structure that's been put in here at 29,000 to see if that will hold. That's a huge confidence tester for institutional investors. They want to know, if I'm buying at 35,000, 40,000, I will not go below 30,000. And they'll probably set their limits there where they will take their risk off the table if price approaches and breaches that level. So from a macro investor standpoint, that level has to be tested to see if it'll hold. If that level breaks, obviously, then you go back and you test this 2017, 2018 high of $20,000. If you're talking about Ethereum, that's $1,700. Major market structure is put in on Ethereum at $1,700. Ethereum is going to test that level again to see if it holds. Institutional investors want to know that that level is going to hold for the long term. So ultimately, what you're looking for is a $1,700 base in Ethereum. Ethereum will get back to $4,800, probably $5,000 this year. Just like I feel like, given all things being equal and conflict not being an issue and being avoided, hopefully the Fed being smarter about policy in landing things softly, Bitcoin should get back to the $69,000 level this year and test that as long as these levels hold. So those are the things that I'm looking at. Like I said, I do want to bring you updates in a timely manner because we're going to be seeing a lot of volatility with the markets, given what's going on with Russia, given what's going on with the Fed. things like that. So check out my Twitter. Make sure you connect with me there. The link is below in the description. And I'm going to post pin in the comments the Twitter link so that I can give you updates, let you know when I'm putting these videos out as things change, as markets conditions change, and as we start to see more and more volatility, which we will. This sell-off will probably continue into the afternoon. We'll see. We've seen this pattern before in Bitcoin. We need to see if this is going to retrace back to this 41,000 level, or if it's going to drop all the way back to that $35,000, $36,000 level, and then move on from there. But right now, a lot of volatility out there, a lot of uncertainty. The last time we saw a pattern like this was right over here back in December, where we had this little double top before the big move down, a couple of levels ultimately to here. So we want to be careful of this, keep an eye on it. And there's a lot of uncertainty out there. So investors are just kind of taking chips off the table for the weekend until we get through the Fed meeting to see what they do. If they come out strong, we're going to see some more downside. We're going to go back and test these levels. If they come out hawk or more dovish and more, weaker and accommodative in policy, then you could see a nice little rebound and more movement back into that retracement like we saw over here. We're watching this little fractal here. And just to give you an idea, this little drop here was about 10%. So if we're repeating something like that over here, we're not even 2% into that move right now. It's only down about, well, it's down about 6% already from the high. So 10% would take you back down to that 40,000 level, and then we could continue on from there. So we could be playing out something like this here, or we could be playing out something like this here. We're just not sure in terms of what that ultimately is going to look like. This structure here looks more consistent than over here. But in any event, there's a lot of things outside the norms for the space right now. As we know, this is a risk asset. It is correlated with the markets. That's the way the investment world is viewing it. It's not my opinion. It's just what it is. So you have to watch the global macro environment to make sure that you're making the right moves in the space. The altcoin market is following all of this. If you look at the charts, they are all pretty much the same right now. Everything's kind of doing the same thing. You might find one or two that are kind of moving up and down. Proppy, I told you Proppy is one that I'd been tracking and making some moves in and out of. You see this big jump here was because they did an online NFT auction of a real property in Florida, a single family home in Florida. They did an NFT online auction yesterday, and this popped 40% going into that, and then it immediately dropped. So, there's things like this out there that you can kind of pay attention to if you're trading and kind of get in and out of. But right now, your support's back down in this area. And this is where I've been taking some little trades in and out of this since this asset hit Coinbase. That's something else to watch for. A lot of assets will hit Coinbase and they'll jump 30, 40, 80% when they hit Coinbase, and then they drop right back down. So these are some of the ones that have hit Coinbase recently, and a lot of consistency in their price charts, because Coinbase is a very popular platform in the United States exchange. So when assets hit Coinbase, they tend to spike and then they drop right back down and they find their base. So pretty interesting to watch those. If you can catch them right as they list, you can make some good moves, but you got to get in and out of them quick to make sure that you're covered there. Gala is another one that I've been watching, and this one had a nice move here and is kind of retracing this move to try to figure out, is it going to drop back down to this base here because there's no support other than right here below it, or is it going to continue onward? This is a dangerous one here that you want to watch. If you enter something like this, you have to be prepared for it to go all the way back down. So you want to set your stop losses, things like that. So that's why I had those highlighted, just kind of paying attention to them and looking for some potential trades until the wind was let out of the sails today with the Fed news and with the news on Russia. And again, my thoughts and prayers is with the Ukrainian people. Hopefully we can avoid this, because this is not a good situation. So anyways, these are the things I'm looking at. Check out my Twitter, make sure you connect so I can keep you updated with any of the events that are going on in the markets and around the world. And until then, I will see you on the next video. I hope you have a fantastic rest of the day.